start with the audit report. If we talk about the meaning of audit report, then we can say that auditing of the account of a company is usually done by an independent external auditor. And audit report is the end product of the audit process. It is as like as a letter from the auditor of a company that is the end result of the audit process is in form of an opinion on the basis of whatever work, whatever auditing has been done by the auditor in auditing process. So it states that auditor's opinion on whether the company's financial statement are providing a clear picture of the state of affairs of the business or not. The audit report is generally accompanied by the company's annual report. The audit report is required by bank, financial institution, investors, creditors, and regulators for various purposes. But the main goal or main aim to analyze the audit report by the investor is to check whether the financial statement of a business concern is providing a clear picture or no. So, if we consider the statement or definition of Lancaster, then we find that an audit report is a statement of collected and considered fact, collected and considered in the process of auditing by the auditor. Many times auditor collect the evidences regarding the transactions contained in the books of accounts and consider those evidences as the proof of the transactions maintained in the books of accounts by the business concern. So, report is a statement of collected and considered facts, so drawn up as to give clear and concise information to persons who are not already in possession of the full fact of subject matter of the report. So, with the help of an audit report, an investor or interested person can analyze the financial position of the business concern in which he is going to invest. And after the imparting knowledge from audit report, an investor can take decision to go with the investment in the particular company or firm or not. So, various elements are considered by the auditor in his audit report. There are various paragraphs, there are various important points that should be contained by the auditor in his audit. So, all about audit report is the opinion in written form provided by the auditor as that financial statement of a business concern is providing the true and fair view or not. There are various elements that should be contained by the auditor in his audit report. Let me start to discuss. First is title of the report, then name of the address, introductory paragraph, scope, opinion section, signature, place of signature, and date of the report. Let me discuss all these elements in detail. Title of the report. The title of audit report should help the reader to identify the report. It should disclose the name of the client. The title differentiates the audit report from other reports. So, in the title head, name of client should be there. Second is name of the addressee. The addressee normally means the persons who appoints the auditor. If a company appoints the auditor, the addressee should be shareholder, because the shareholder, equity shareholder, are the actual owner of a company. As per law, the complete address of the addressee is required. Address for the statutory audit shall be shareholders, and in case of special audit, it is central government. So, the name of the addressee paragraph emphasizes that The addressee name and proper address of the addressee should be mentioned in the audit report. The next is introductory paragraph. This paragraph should specify that it is the auditor's opinion on financial statement audited by him. The period covered by financial statement should be stated with exact dates. So, introductory paragraph is specifically emphasized on the date of the financial statement covered by the auditor for audit work. Next paragraph is scope. The scope part should include the matter of fact relating to the manner in which the audit examination was made. The audit examination should cover company's accounts, profit and loss account, balance sheet, cash flow statement, and other related registered and statement that prepared by the client under the head books of accounts. The examination should be as per the relevant law. The auditor should not curtail or limit any examination task. They have to do the examination work with the proper due care. Next element is opinion. The auditor's opinion on the books of accounts and financial statements examined by him is based on the information and free from bias. Auditor has to give his opinion as whether the financial statements are arithmetically correct and corresponding to the figures recorded in the books of accounts. He has to give his opinion as in case of unqualified opinion whether the financial statement presents are true and fair view of the state of affairs and the results of the operations. We have to clarify that if the balance sheet and profit and loss account do not present a true and fair view, then what was the reason behind this? And what is exactly wrong with the books of accounts? So, opening paragraph is a gray area of an audit report that provide overall conclusion regarding the work done by auditor in his audit assignment. And after concluding opinion paragraph, our auditor is authorized to put his sign on the audit report. Next element is signature. The signature part should include the manual signature of the auditor. Personal name and signature of auditor should be given. If the auditor is a firm, the signature in personal name and firm name should be given. If auditor is in individual capacity, then he himself have to sign the report. Or in another case, if a firm is in the capacity of auditor, then any partner of who is liable to do the audit work may be signed the audit report on behalf of the firm. But he should be a CA as per the CA Act 1949. And the last two elements is place of signature. They should include the location of the auditor or the auditor firm, which is ordinarily their city. Date of the report, date of completion of the audit should be mentioned in this section. So, if we analyze the elements of audit report, then it imparts us that every important element should be there, whether it is the title of report, address of report, paragraph of report, scope, opinion, signature, date, place. And the most important element part of the audit report is opinion that provide the crux of overall work done by the auditor. Let me discuss a sample of audit report. Yes, independent auditor's report to the board of directors and the shareholder. Company name ABC. Address. Now start the paragraph area. Report on the financial statement. We, the auditor, have audited the accompanying balance sheet of ABC company as of means period of financial year, and the related statements of income, earnings, cash flow for the years then ended, and the related notes to the financial statement. Then there should be management's responsibility for the financial statement. In this paragraph, management is responsible for the maintaining proper books of accounts. This should be mentioned. Next, auditor's responsibility. In this section, auditor maintain that our responsibility is to express an opinion on these financial statements based on our audit work. We conducted our audit in accordance with the law, standards, something, whatever we have used as per the applicability of the client business. We have to mention all these standards of law or provisions. But what we are seeing, opinion. Auditor can give their opinion only. Now the conclusion of the audit report, that is opinion. In this section, what we are seeing, in our opinion means in the opinion of auditor, the financial statements referred to previously present justly in all material respect. Material means important aspect. The true financial position of business company of an as December 31st date of the financial year, and the result of its operations and its cash flows for the years then ended in conformity with the accounting principles that are generally accepted in the United States of America. If it is done in the Indian, then this is in the concern of India. GAAP, accounting standard, provisions of companies law, income tax law, etc. Then the auditor mark their signature and date of the audit for completion. This is a simple audit report format that is given by the independent auditors. There are various types of audit report. Let me discuss types of audit report. Mainly, we find only 4 types of audit. First is clean or unqualified report. Second is qualified report. Next is adverse or negative report. And fourth is disclaimer report. But in various specific cases, a fifth type is also there. It is audit report with an emphasis of meta paragraph and other meta paragraph. Okay, let me discuss one by one. First is clean or unqualified report. Clean or unqualified report will be given by the auditor if auditor is satisfied that the accounts, balance sheet, profit and loss account, cash flow statement, and other statement and registers do represent a true and fair view, and they are prepared in accordance with the accounting principles and statutory requirements. Means in this type of report, there is no objection from the side of auditor on the books of accounts of business concern. This report shows that books of accounts has been maintained in a proper manner with the following of law provisions related to the business concern and according to the accounting principles. So, without any objection, this is the report provided by the auditor, and he mentioned that the financial statement of business concern is providing a true and fair. So, it is called as the clean or unqualified report. There is no qualification from the side of auditor in this report or on the books of accounts of the business concern. The next is qualified report. In this report, the auditor believes that overall financial statements are not fairly stated. Overall financial statements. The reason for giving qualified report may be as the books of accounts, profit and loss account, and balance sheet do not represent the true and fair view of the state of affairs and results of the operations. Reason behind it, lack of compliance with the accounting principles and statutory requirements. The auditor is not able to verify the value and existence of certain assets, then he can go with the qualified report. If the information requested by the auditor is not furnished before him for the proper auditor, then he can again choose the qualified report. If proper books of accounts are not maintained as per by the required law, then again auditor can choose the qualified report. If part of audit examination done by other auditors, then auditor can also go with the qualified report because the full audit is not done by the particular single one. So, qualified report means, straightforward qualified report means the books of accounts of business concern is not keeping the actual picture of the business or not showing the true and fair view of the state of affairs and results of the business operations. So, for both these reports, we can say that if books of accounts are properly maintained in all aspects, then auditor can give clean or unqualified report. And if the auditor find after the auditing work that books of accounts of the client is not showing the proper true and fair view, then qualified report should be used by the auditor. Sure. Now, the third type is adverse or negative report. In the situation when there is sufficient basis for the auditor to form an opinion that the whole accounts and financial statement do not present a true and fair view of the financial condition, the result of operation and adverse or negative opinion will be given. The adverse or negative report will be given on the following grounds. When the auditor is not satisfied with the truth and fairness of the financial statement, non-compliance with the gap, mistakes, differences, frauds, error, and material misstatement in the financial statement, omission of material disclosure are there, then we find that totally wrong representation are from the side of books of accounts. Then auditor choose the negative or adverse report. So we can say that if books of accounts do not present a true and fair the financial condition and results of operation, then adverse or negative opinion should be given by the auditor. Next is disclaimer report or disclaimer of opinion. The auditor may disclaim or refuse to give opinion on the accounts, profit and loss account, and the balance sheet when he does not have sufficient information to provide his opinion. In the scope and opinion paragraph, the auditor should give disclaimer of information. For providing disclaimer of opinion, there should be sufficient grounds. Like the auditor has not been able to obtain sufficient information to form an opinion. The audit examination is not adequate to form an opinion. There are some material undetermined items in audit examination. And on these basis, if auditor finds that he is unable to give any type of opinion, then he can go with the type of report that is disclaimer of opinion or disclaimer report. In this report, he didn't claim in his opinion any type of true and fair view negatively or positively. Means there is no report from the side of audit. Fifth, audit report with an emphasis of meta paragraph and other meta paragraph. Auditor may mention this paragraph in his report to draw the user's attention to the matter which may or may not be disclosed in financial statements but are fundamental to users' understanding of financial statements. It usually appears after the opinion paragraph in audit report. Means in this type of report, auditor have to be emphasized on the particular paragraph. So there are 5 types of audit report. Let me sum up. Clean or unqualified report means the books of accounts of the business concern and result of operation represent a true and fair view of the business concern. Qualified report. When the auditor believes that overall financial statements are not fairly stated, then he can choose the qualified report. In qualified report, auditor satisfied with a maximum part of books of accounts, but some part is there for that he is not satisfied. Then qualified report is there. Adverse or negative report. This report clearly stated that operation of the business, financial statement of the business is not showing true and fair view. Then auditor have to go for the adverse or negative report. Disclaimer of opinion or disclaimer report. It imparts that auditor is not capable to give any opinion. Then he choose the option to disclaim his any opinion. To disclaim his report. He didn't claim anything in his opinion. So this is called as disclaimer of opinion or disclaimer report. And the 5th one is when auditor want to emphasize a paragraph to get the attention of the users. So these are the types of audit report. 4 is main and 5th is secondary. But straightforward, if someone is saying that there are 4 types of audit report, then this is okay. Doing audit work, auditor can certify various types of works, but for audit work, he is authorized to give an opinion only in the form of audit report. And if auditor is doing some other work extra from audit work, then he can use audit certificate. A certificate is written statement made by a person having authority to make such statement. A certificate is a proof or an evidence of the matter therein. For example, a certificate is given for various things as certificate of diploma, certificate of degree, or certificate of marks obtained by a particular student. When an auditor certificate is a financial statement or any other statement, document, or account, it implies that the contents of that statement can be measured and that the auditor has vouched safely the exactness of the data. So what about auditor certificate? Means auditor certified some calculation or exactness of the data that may be verified by the other person, because the auditor give the exactness of the data on the basis of his verification and examination. So the term certificate is therefore used for the auditor various certain exact fact, as auditor is considered an expert or a specialist of books of accounts, accounting system, related acts and states. So the certificate given by him is of great importance. Now we can say that audit certificate is a financial statement or any other statement, document, or account. It implies that the contents of that statement, whatever mentioned in the certificate, can be measured, and that the auditor has vouched safely and exactness of that data. Then, how audit certificate is different from audit report? Let me discuss. Difference between audit report and audit certificate. These are the basis of difference between the auditor report and auditor's certificate. First, nature. In case of auditor's report, we find that it is an expression of opinion about the books of accounts. Whereas auditor certificate, it is a confirmation of correctness and accuracy about some matters or data. Second is basis of audit. The report is based on assumptions and estimations, whereas certificate is based on actual figures and facts that has been measured by the auditor. Criticism. There may be criticism about the report. The first is audit risk may be there. But in case of auditor certificate, there is no scope of criticism about the certificate because the data contained in the certificate has been measured by the auditor safely. Scope. The scope of report is very large or wide, but the scope of auditor certificate is limited because it provides exactness regarding a part of data or some data. But audit report is having a wide range, which can include opinion of auditor on overall books of accounts of the business concern, that whether they are in conclusion provide the true and value or not. Next is scope of advice. In auditor report, in the scope, there is a scope of giving constructive advice to the company. Constructive advice to the company. And in case of audit certificate, no scope of constructive advice exists in the case of certificate. So, constructive advice is existing in the auditor's report, but not in the auditor's certificate. Time of issue. After the end of each accounting year, the audit work will start, and after the end of audit work, audit report should be mandatorily provided by the audit. But in case of audit certificate, certificate is not mandatory in every year. It may be given by the auditor on the occasion on the basis of specific purpose. Last base of difference is liability of auditor. Liability of auditor means as a report is merely an opinion. If it is not correct, the auditor may not be held responsible. But in case of certificate, if certificate finds wrong, the auditor will be held responsible. So in audit report, there are liberal view towards the auditor, but in case of audit certificate, there are straightforward and strong view towards the auditor. He may be liable if certificate is found fake or wrong. So in general sense we can general sense general public can say that audit report and audit certificate is same, but as we have the meaning and scope knowledge of the both, so we can say that there are various bases on which basis we can make the difference between the audit report and audit certificate.